But the big newsmaker today is that $1 billion deal with respect to Mphasis. Let's get in Pranay, who joins in with all the details. And Pranay, you also spoke with the Blackstone management at the conference call. Give us some details as to what this brings to the table for them.
Well, this long-awaited and much-reported deal has finally come through. So, world's largest private equity firm, Blackstone, has clinched the deal to buy Hewlett-Packard's entire 60.5% stake in Mphasis at a price of 430 rupees per share. This is nearly at an 8% discount to Friday's closing price. And naturally, this will trigger a mandatory open offer for additional 26% stake, which will be made at a price of 457.4. That's nearly at a 2.5% discount to Friday's price. So once this transaction concludes sometime in the second half of this year, they will have a majority stake, which would be bought for about $1.1 billion, in line with what we were hearing in all the reports. As you were alluding to the interaction that we had with the senior managing director and co-head of private equity of Blackstone in India, he said the two biggest positives out of this deal is the fact that they've managed to secure a minimum revenue guarantee from HP for about $990 million, which is just shy of the $1 billion mark over the next 5 years. And also it can be stretched over 11 years, where they have 3 automatic renewals, twice that can be done. So this will give them some stability and predictability in earnings. Also, since they've managed to back the current management of Mphasis, they believe that this will not only help in executing their overall strategic roadmap, though they did not share any numbers with regards to a revenue or a profit milestone or an aspirational margin target, but this perhaps is believed to be better, where minority investors would prefer it to be under an aggressive private equity firm, as we saw with Bearing Private Asia in Hexaware. And there's hope that the company will be able to grow its HP business, and more importantly the direct channel, much ahead of industry estimates.
Okay, in fact, Pranay also attended the conference call. Here's an excerpt of his interaction with the PE player.
I understand from your points that similar due diligence, as you would well know from the reports, was also carried out by other players such as Tech Mahindra from the IT domain and PE firm Apollo. So I believe they would have access to the similar information that you have. What I want to understand is what made you outbid the other players, because this was going on for several months and was also closely fought. So I want to understand, how did you arrive at the valuations, and what about your offer made you clinch this deal and outbid the others?
Thanks, Prananjay, for your question. What drove our conviction to basically make this commitment is two things. Number one, our ability to get this master services agreement with HP. This master services agreement is a very strong commitment by HP to a credible supplier like Mphasis and its owner and its new owner whenever the deal gets closed, which will be Blackstone. So I think our view that this agreement will be delivered and is going to be an anchor point to stabilize the company going forward. So that's that's point number one. And the second point is unlike other players, as I mentioned, Blackstone has a very large internal portfolio of companies. If you were to aggregate Blackstone globally, Blackstone is the world's largest alternative asset manager with $330 billion of assets under management. If you were to aggregate Blackstone like the way GE does, it will be a Fortune 13 enterprise. So we have an ability. We are a customer ourselves to bring business to Mphasis, which other market players may not have that ability. So we have an ability to bring that, so which allows us to have a higher conviction in making these IT services investments compared to other players.
Okay, so since your ability is distinguished over here, that's the point I want to understand. You mentioned about a strategic roadmap that you've laid out for growth, not just for growth actually, but also to bring about predictability in earnings. So this is going to be the next most important phase for the company. How is the leadership structure going to change? Because the management team has been pretty senior over here for a long time. So how would the leadership structure and the board structure change from here on? once the deal is complete. And because of your ability, how are you now going to scale this up and take it to the next level? Would you be able to share any revenue profit milestone over the next 4-5 years, or a targeted margin that you're working towards to? And also, since you have since the company has a solid cash corpus, what would be the utilization plan going forward for this?
So as you know, Pranjay, I cannot make for a publicly listed company any kind of revenue, earnings, or cash flow guidance. I think that would not be appropriate. And I think when you do get to speak with the management in the appropriate forum, you should take up that topic with. We have an ability, we are a customer ourselves, to bring business to Mphasis, which other market players may not have that ability. So we have an ability to bring that, so which allows us to have a higher conviction in making these IT services investments compared to other players.